Today we are talking about buying the dip. Everyone has done it already, and recently it became like a religion, right? Buying the dip. It's only weak hands that leaving the market, and you should be buying. And actually, let's have a look what happened. Over the last couple of weeks, we have seen that the stock prices are absolutely hit the highest points, all right? As of the current situation, we are on the downturn. So we have seen that Tesla, for example, was at $900 here. Then we had seen Space at $60, right? We have seen Peloton at $160, right? We have seen Beyond Meat at almost 200 levels, right? All of those stocks are currently down, and also Bitcoin. I mean, Bitcoin it's the same, right? I mean, Bitcoin reached 63,000 on the April 13, but then if you look into those February levels, also here we had the highs of 55, and it was a little bit longer for crypto, but then in the end, you know, specifically yesterday showed us that also crypto is not the safe haven as of now. Now, what happened? First of all, you had this huge bull run, okay? Great earnings. Earnings that were much better than anticipated, right? I mean, you had unbelievable, crazy, expectations beat because expectations were super low because it was the pandemic, right? And everything went low and everything went to basically to broken, right? So obviously, those companies, specifically, those innovative companies had something already figured out or figured out faster or had a better product already. And, just everything that was in the digital space went up. Okay. So this was the first 2 points. Second, we had an unbelievable new flow of money and people that invested, right? Robinhoods and all the retail investors, which is normal, guys. That's usually happen, okay? It's already happened in 1602 with the Dutch Eastern trading company on the Amsterdam Exchange. They went absolutely nuts, okay? This is just exactly, I posted this story on my Instagram because it's so important that people understand that they cannot say, oh, now the weak hands are out, or the gamblers and so on. It was always part of the public markets, okay? And you look stupid when you say things like that, okay? And therefore, think about that. It's really, really important to understand this public markets. It's for everyone. That's why it's called public markets, okay? Grandmas, janitors, everybody can come and put their money into stocks that they think, or crypto nowadays, that they think they will be more worth in the future. And sometimes it gets a little bit hyped and it's a little bit a mania, but that's normal because people want to get rich quick. That is like the nature of us. It's like we are greedy sometimes, okay? And that's why it's also we didn't sold in February while we had like crazy portfolio gains, and we could have say, okay, you know what? Let's sell some to get some profit. But no, we hold on, right? So we just telling ourselves buy the dip. So the question is, what will happen now? Now, as we had the great news of great earnings, now the earnings of the last period, the Q1 earnings were good, but it was not enough to bring the markets up. Moreover, think about what happened. There was this upcoming silent but very, openly seeable factor of the bond yields rising. And, the rising is not that big problem, but how fast it raised. Okay. And this was like a big concern. And that's why the selling started in February. Now, if you ask me as a long-term investor, I will tell you that buying the dip is always the right idea. Dollar cost averaging, okay? This is the key word, the magic word, how you can get really rich quick, okay? And by meaning quick, I mean in a couple of years already, okay? Just save, put it into your stocks that you researched, that has a great value, that maybe now even a little bit undervalued, in my personal opinion, because I researched them. It's, Peloton, Beyond Meat, Space, Tesla, those companies are undervalued for me, that are, much more worth into the future. And when you're thinking about this and this mentality and put this to the mindset of yours and just say, you know what? As more it goes down, it's better for me, because in the long term, over the next couple of 10 years, the stock market will be higher eventually. Okay. And if there's a crisis, even better for you. You can buy for cheap. And I want to show you an example also that I want to emphasize that it's much better to spread your stocks and crypto buyings over a long term rather than, waiting for this big dip and just put it in. And this is scientifically proved that you will make the most money if you just put every month's money to the market. Okay, proven. I'm guaranteeing you. Okay, I will show it to you in a second. So I want to make sure, guys, that buying the dip don't become this, mantra of us that, oh, now buying the dip, now I'm buying. It's like, it's the continuously slow approach that made Warren Buffett first a millionaire, then a billionaire, and then one of the most richest persons in the world. And he had just had like 10 stocks. Okay. He saw the business. He researched and read a lot about it, then decided to invest in it, and then just add it every now and then. Okay. He got dividend. He put it back. He got dividend. He got it back. Okay. He got more money from investors. He put it back. So just very, very simple and clean strategy to get real rich, guys. Okay. I'm telling you, this is working. I had this case with Tesla stock, and it will be the case with space stock as well. This is my personal opinion, never financial advice, obviously. And now let me introduce you to Steady Sarah. And there's this wonderful graphic that I always like to show to people for education, because this channel is also about education, right? To make you the better investor. And therefore, make sure to subscribe and like this video if you like this knowledge, okay? Free of charge as always, and every single day. One vlog, one live stream, just for you guys. So let's dive into it. So how to perfectly time the market. This is how it's called here. And it's, between Tiffany, Brittany, and Sarah. And as you can see here, Tiffany is already a little bit disappointed because Tiffany is trying to time the market, and she actually is, buying the top of the markets by mistake. Okay, so she, saw that there's something coming up in 1985. Then there was the crash, the Black Tuesday, as you might remember, 33% from all-time highs. And then, there was the .com crash, there was the financial crisis, there was the current health crisis. And every time Tiffany bought at the very top, and every time she put in their $200 over the last couple of decades. Okay, so this is case number one. Case number two is Brittany Bottom. Brittany Bottom was lucky. She bought exactly at the bottom every single time. She waited and then bought at the bottom. Okay, waited and bought at the bottom. So she was quite lucky, and also she made sure to invest her $96,000 into the stock market, and she grew it actually until today to $1.123 million. Bravo, right? You think? Now, how to get the bottom? Well, it's impossible. Exactly. That's why it's just, a story, a fairy tale. Fugazi, all right? So, and then you have Sarah Steady, okay? She actually said, I have no idea when there will be the bottom, where there will be the highs, where something happens, when it's a good time, when it's a bad time. So she just auto-invest $200 every single month into the stock market. So what happens? Well, she made actually the biggest profit, okay? She turned her $99,000, which each of them three invested, into $1.6 million, guys, okay? Now, I see you are a little bit wondered how this can happen when Brittany Bottom actually bought at the bottom. Yes, but she waited. And this is the problem, because when you wait, you will wait out the bull market that already multiplies your money, and then it makes like a 30% crash, then you buy, and then it goes up and you're like, yeah, I'm waiting now for the next crash, right? And then you're losing again a lot of time and raising and profits that your money can make. And then you have this compounded effect even on your stocks and money, where the money makes money on the money and money makes money on the money. Okay, you got it. So this is a very easy way to show you that, buying the dip works, but it's more important if you want to turn $99,000 to $1.6 million to just invest every single month. And, this was the example for the S&P 500. So now imagine you even got the right stocks. Well, if you don't even want to bother with the right stocks, just put your money in the S&P 500. As easy as that. Stocks and crypto can be so easy. So just don't overcomplicate it.